that a setup to talk to Banríon Capital President and CEO Shana Sissel, sitting to my left. It's great to see you in person.
Absolutely, great to see you in person.
So you join ahead of a consequential 10 days. We've been talking about it. You have earnings, you have the election, you have the jobs report, you have the Fed in there as well. When you think about the hair trigger that this market seems to be on, what are you paying the most attention to?
The election.
Yeah.
By far and away, the election. All the other things are normal business cycle, things that occur, economic data that we normally get, but the election is the most consequential because there are several surveys out there that have shown that businesses are holding off on making any decisions till they have some idea of what candidate is going to win, because it really will affect the rules of the game, if you will.
Speaking of that, we had a survey from MLive today that says that investors are largely thinking that a Donald Trump victory would be better for stocks. You know, some of that calculus is down to the corporate tax rate, but at the end of the day, you know, they do believe that stocks would go up either way. And so how do you parse that trade out, especially when you know that the market has been employing that Trump trade so heavily in the week up to election?
Well, it's interesting because the polls show a virtual tie at this point, so where it goes is anybody's guess. But I will say this: we spend a lot of time thinking that certain candidates and certain outcomes will be better for the stock market than others, but historically, it doesn't make that much of a difference, to be honest. Just having that certainty is the thing that sends stocks higher. It's less important who wins. Now, if you look back when Trump won in 2016, that did send the stock market higher, but that was a different environment than we are in today, where we've just seen strength in the stock market all along.
We're already up 22, 23%.
2 years in a row.
Yeah, exactly. Double 20% gains is pretty crazy, and I guess it's because we do have a lot more certainty than we like to talk about, right? We know no matter who wins the election, they're not going to cut spending. It's going to grow. The debt and deficits will rise. We have this new magic money tree, and that's all the market cares about, right?
Yeah, I'd like to tell my son that, right? Like, what do you think? There's a magic money tree in the backyard, and I can just pull off whatever you want, something. You know, the government is essentially doing the same thing. I completely agree with you.
Are the bond vigilantes going to stand up to this at some point? I mean, this is what I wonder after the election, especially if you get a red sweep, right? Mm-hmm. Trump winning and Republicans taking the House. Does the bond market say, hang on a second here, we're going to raise rates on you a little bit?
They kind of have to. If you look at, I believe I was looking at a strategist piece the other day, and it showed that the cost of debt right now is about 3.6%, which is lower than any place on the yield curve right now. So they kind of have to come up to kind of meet where the curve is. So rates do have to come up, and that can be of concern. My bigger question is, what's the Fed going to do? Because there's more strength in this economy than I think we'd like to give it credit for. And that puts the Fed in a difficult position. The job report from last month was unusually strong in the way that the Fed probably wasn't expecting. And I'm not convinced that inflation is completely under control just yet. I think the Fed has to be careful what they do at this point.
Interesting. So it sounds like you think that we're not getting another 50 basis point rate cut or anything to that magnitude. With that backdrop, I mean, how do you position in this market? You think about how you build a portfolio around these different cross currents, and there's so many of them. What's your conviction right now?
So I just want to say, when they cut 50 basis points, I thought that was an overreaction. Mm-hmm. I never saw it coming. I will be the first one to admit. You can watch me. You can see all my clips. I never predicted that.
You have the receipts.
I have the receipts. I was wrong. That surprised me. Now, that said, in this kind of environment where stocks and bonds are behaving kind of in unison, I am a big fan of using alts. And Queen of alts, here with you today, telling you I use alts. Big surprise. But I do think in this environment, having that diversification benefit really matters. So that's really where I'm spending the time. And I'm taking it more out of fixed income than I am out of equities. I think there's more upside opportunity in equities than in fixed income. I think fixed income has more questions. So that's where I'm kind of taking from in my portfolio to put into more alternative strategies.
Shana, great having you on the program. Great having you on set. Thanks so much for joining us here in person. Banríon Capital President and CEO Shana Sissel.